Ladies and gentlemen of the crypto space, we're live on a Monday, October 11th at 11:41 a.m. Welcome to the channel that does things differently. That's the way we've been doing it for pretty much the last 2 years, and that's the way we'll continue to do it. Things that come out of my mouth are contrarian. It's not what you typically hear from the average crypto YouTuber, and I've always wanted to do things differently. And it's very interesting how my story has evolved, my content has evolved over the last 2 years. But we are where we are, and my content has a common note, and that common note is risk. Most people enter the crypto space, the general public, and they want to make a lot of money. Now, the first thing that comes to my mind that I've learned over the years is what the fuck are you going to do with the money? If you spend the money, you don't have any more money. So you got to figure out how to make money from your money. That's the first thing. And in order to actually accumulate any meaningful amount of money, such that money makes money, you got to avoid risk because risk introduces the potential for loss. Avoid loss, and you have capital that accumulates. Now, the crypto space is filled with obviously asymmetric appreciation. Shit goes through the roof all over the place. But that's not the most important characteristic of the crypto space. The most important characteristic, say that 5 times fast, of the crypto space is that it actually works. Whereas in legacy finance, you're screwed. Banks do shit for you. You're losing money left and right. You're never getting ahead. You're never saving anything. But in the crypto space, you could actually save money. Money actually works because people want your money. You put your money in a bank account, no one's borrowing it. No one's doing anything with your capital. It's just sitting there doing nothing. Banks get to use it. They end up buying T-bills with it to get like a fraction of a percent of interest, which is such a waste because that capital is much more effective when deployed to like assets or business. But they don't even do that. They do nothing for you. Banks have no innovative financial products or services whatsoever. And frankly, I say that very comfortably for the entire legacy financial system, all the way up and down the stock market. It does nothing for you. You buy a share of Tesla. It does nothing for you. Sure, it goes up in value, may go down, probably going to go up, given the way the macroeconomic outlook looks with regard to U.S. equities versus international equities. But it does nothing because you're going to have to sell it in the end. That's the worst investment I could possibly think of. Why would I buy something if I have to sell it? You want stuff that works for you. And this is Warren Buffett. Warren Buffett's written all over the crypto space. And he doesn't even know it. Buy companies. And the reason you buy companies isn't because the share price goes up in value. He doesn't give a shit about share price. He watches the share prices plummet when you have deflationary impulses like in 2020 or 2008 or whatever. He doesn't sell when the market's collapsing. He's buying one, but he's buying businesses and he owns the business, so he basically gets a part of the revenue share. He owns the business. He's not getting dividends, the dividends to stockholders. It doesn't work like that when you buy a business. No, the dividends to shareholders, public shareholders, are the leftovers. That's after the corporate salaries. That's after the big wigs get their cut of revenue. That's leftovers. The crypto space is where you get transaction fees. It's where you could lend and people pay you to lend depending on market conditions, like Aave. If the market is hot and people are borrowing a lot, you're going to get paid more for your money. And clearly, we cover a huge amount of content that's above and beyond just the basic lending or the basic providing of liquidity to capitalize on transaction fees. So, where does that leave us? That leaves us with a playing field filled with opportunity overload. And that's the crypto space. And the biggest thing I could advocate in the crypto space is when faced with opportunity overload, that's when you need the most restraint. That's when you need to really put together a framework, have a game plan, and let your capital grow. There's nothing that is not honorable about going to work and saving your money, but you want to do your self respect. So you save your money in things that are actually saving your money. because you put your money in a bank account, you got a negative real interest rate considering debasement. So you're losing money. It's disrespectful. It's self-disrespect to put capital in a bank account. So if you're going to deploy it in the crypto space, you want to do it in such a way that it's risk minimized. So you're growing and accumulating capital. And as I always say, you turn 1% into 10%. That changes a portfolio, and no one's really complaining about that. You don't need to take 50% of your portfolio and buy Doge and hope you're going to turn $1,000 into $1,000,000. One, that's how you cause emotional distress. Two, the odds are you're probably not going to do it. Three, yeah, sure, plenty of people have done it, but that's the minority. Four, if you do it, you're not going to know what to do with the $1,000,000. So you got to figure out how to manage money before you make the money. Anyway, welcome everyone. That was a big rant. That's how I do these streams. I open up with a strong, hard-hitting macro rant. Now we're going to go into comments. Let's do this. Pop it over to the main screen and see who's in the stream. 36 people in the stream, 21 likes. We could do just a little bit better. Smack those thumbs up, yeah. Joe's in the house. Look, it looks like my conviction for Tarot will be challenged today. I don't know what the chart looks like. I know vaguely what the protocol does. I know the way Solana fits into the big picture. Conviction with a protocol, you obviously have assessed how the protocol fits into your story, your narrative. It does not fit into my macro narrative currently, so I cannot provide valuable insight, my friend. Apologies. Katie, can girls buy crypto too? Yeah, of course girls can buy crypto too. Don't need to necessarily buy crypto. I tell everyone dollars work in the crypto space. When you can get 30 and 40% on dollars, that's a risk minimized position that's outperforming the basement. That's a savings account. Now, clearly, those yields are probably going to be diluted. Those yields are probably transitory because they're probably from incentives from protocol treasuries. So they'll go bye-bye eventually, but that introduces the concept of opportunity cost, where you have to rotate the rotator. You have to rotate your position to an increasingly lucrative play. There'll probably be other stablecoin pools that are incentivized, or maybe a leverage position with Abracadabra and a 3 pool where you get 3 times 8%, let's say, 24% of the money. Anyway, that's a more sophisticated play. We've gone down that road. We know about it, but that's not where people should be starting. And I'm trying to focus the content of this stream on the basics, because as the market gets hot, that's when the emotions start to run. That's when the new folks start to come into the space and they end up going degenerate. And maybe they don't even realize they're going degenerate, buying something that's up like 5,000% and then get worried when it crashes 30%. Most people cannot handle that type of volatility. And it's intimidating. If you come into the crypto space with $1,000 and day 2 it's down 30%, you lost $300. Most people cannot handle that. So don't start with that. Don't do it to yourself. Don't cause those emotions. Attack the crypto space different, because we can do better. Doc says in the house, Wave Mapper's a pleasure. F-Dub, appreciate the stream massively. I appreciate everyone that jumps on the stream. We could do things better, as I say. Minays, hi. Shish, hi Noah, what a weekend. Oh, incredible. The price action is extraordinary. Spell took a 30% dip. That's a perfect example of a highly volatile asset. You get in a difficult time, you're going to catch a 30% dip to the downside. Let's take a look at the Spell chart. Now, this is obviously the daily chart. Now, understanding technicals is another learning curve, especially for new entrants to the space. It's not going to take 5 minutes. It takes years to really get a feel, to get a sixth sense for what these charts actually mean. And if you bought at 25 cents and you're down at 19 cents, it's a 20% dip to the downside. You're underwater. And that's not a good feeling. But if you zoom in and you look at the hourly, it's a nice chart. There's no reason you can't have a mean regression down to the 100 SMA in the hourly or even lower. I don't know the color scheme. What color scheme do I have going on here? Green and yellow. 50 SM. Oh, no, I think that's the 200 EMA and the 200 SMA. There's no reason you can't have a 200 SMA EMA mean regression. You're going down to like 12 cents. That's the whole point of mean regression. Is kind of baked into humanity. Haven't had a mean regression in the stock market in God knows how long, but that's another story. Let's keep it going. Let's keep it going. Um, F-Dub, I don't know what you said. It was obviously much earlier in the stream. You said, "What do you mean?" I'll get to it if you ask it again. Um, More lobby. Joe, Joe Mama. Joe. Joe's another story. Banker Joe. Did it launch yet? Should put some steam in Joe, hopefully. Joe deserves some price action. I know a lot of people are exposed to the Avalanche ecosystem. Shish, this ecosystem from the Abracadabra team seems too good to be true. Time will tell, I guess. Maybe I'm nervous because I'm in all three projects now. I myself am only exposed to ICE and Spell. I don't have any time exposure, but that's okay. You don't have to own everything you want to own. It's not easy, but you don't have to do it. G Mogul, only 22 of us. Let's go. 28 likes, 60 people in the stream. We can do better. Bees Irish is in the house. A pleasure. Alex, have you taken any profits on Spell? What is profits? What is this profits thing? No, because I don't want to pay capital gains. Instead, Spell pays you 30% of the money. It's a salary. Spell pays a salary. So I take out cash that I need to pay bills and I pay income tax. I'm not going to liquidate a position. Any, I, none of the portfolio is currently in that type of structure. Um, at this point, considering Spell's appreciation, 90% of the portfolio is two assets, Spell and Curve, and they're revenue generating assets. They produce income streams, they produce a salary. I could take a paycheck on a weekly basis and basically not disrupt the core position and not pay any capital gains tax because they're unrealized capital gains. And clearly, the income that I take on a weekly basis, taking profits as you call it, I call it income, that I would pay income tax on. Andrew, with S Spell, is there a way to see how much you're making in Spell per day? That'd be nice. It looks like well, bear in mind that's an AP an A, APY because S Spell compounds. So you could do the calculations, but that'd be a nice user interface improvement for the Abracadabra portal. And we'll see what comes. I'm sure their portal, their new design, is coming sooner than later. And Bassard, what's up? What's up? Foo Bear, pleasure. Daniel, any remote hours coming up? I'll try my best. Keep an eye on emails because when I click to enable it, it does send out an email. Maybe I'll pop it on Twitter, but I haven't really been doing remote hours. It's difficult. It's much easier for me to do the ask vids, as you can see here. All you have to do is go to noahsplays.askvid.co. You pop well, this is my dashboard. So if you go here and you scroll down to the bottom, oh, that's share your channel. Where's ask a question? It's somewhere around here. You know what it is because I have the manager's account. But AskVid is much easier for me to manage because it's asynchronous. So I'll try my best. Emails is where you'll see remote hour, but AskVids, I'm more than happy to respond to any video questions, or rather, any questions with a video response, so you get to see my fugly face. Careless, good morning. 300% return spell FLP pool insane. How long do you think it will last? Well, if it doesn't last, it's not. Now you have opportunity costs, so you rotate or you migrate your positions. Bear in mind you're exposed to Eth and Spell, so it's a double volatile pair. So there's a risk associated with that, especially with regard to potential asymmetric appreciation of any of the assets, and that would include impermanent loss, albeit from a downside perspective. That's also important. You could have plenty of macroeconomic events that send markets tumbling, in which case downside protection is meaningful. And F paired with spell is considerable also from a downside protection perspective, because whichever one depreciates the least is what will stabilize the price of the LP position. Which is why stablecoin paired LP positions have the most downside protection. Dan, hi Noah. What are your thoughts on putting MIM Ethereum on sushi for sushi rewards rather than keeping it in Abracadabra? Well, MIM doesn't go on Abracadabra. Spell goes on Abracadabra, and you can't really collateralize MIM on Abracadabra. So MIM and Ethereum is basically a dollar stablecoin paired long Ethereum position. So it's dollar stabilized Ethereum. All right, so you got great exposure to Ethereum. If you take a look at Ethereum, well, I was looking at currencies. That's USD versus China's yuan. But if you look at Ethereum, let's take a look. It looks just as bullish as Bitcoin. So it's a great way. USD, a MIM Ethereum pair is a great way to have exposure to Ethereum in a dollar stabilized fashion. So you're going to mute your volatility. You'll have less gains to the upside and less losses to the downside in exchange for the interest rate on the transaction fees, or the yield that the transaction fees offer. Food for thought. Andrew Trame, 30 watching, 52 at this point, 38 likes. Thank you, guys. Alan, a pleasure. Bees Irish, great advice. Alex, good morning. Angel, nice stream. Crypto Beds. Hey, Noah. Kimchi Crypto in the house. Crypto bets. I placed the try crypto into Abracadabra for the sweet 40% APR. I thought I could earn also on Curve. I thought I saw you do it in a previous live stream. Maybe I'm wrong. Well, try crypto itself generates returns. So if you take that position and put it into Abracadabra, you're going to generate returns, but also be able to access the equity in the position. So you're freeing up capital. But you could also leverage the position, which is interesting. Bear in mind when you take like that leverage position on Abracadabra, you don't get to borrow MIM. You can't borrow leveraged MIM, but it automatically reinvested. It's just a leverage position for the collateral, which are interest bearing assets. Diesel Hound, we can do better. Deep House, 2K7. Your logic gives me peace. Thank you. Hope it does. I hope it helps because I know we can do better. Andrew, good morning. Also, Banker Joe's today. Cool. Good for them. Crypto bets here for the rational thinking. We do it a little differently around these parts. Vitoshi, happy Thanksgiving from Canada. A pleasure. A pleasure. Frank, morning, Noah. I broke a few of your core rules. I can do better. I will do better. Folks, listen to the man. Well, I hope you didn't lose too much. I know because I've done it myself. I know how volatile the darn markets are. You know, I mean, if you look at Curve, well, if you look at Convex, let's take a look at some charts real quick. Oh, that's cool. There was a big, like $600,000 sale, which plummeted back down to the 50 SMA and the 15 min. But that's a big candle to the upside, bringing it right back up. And, if you go down to the shorter time frames, how do you play this? What do you do? Who's trading this? This is not worth it to trade. This is some stuff that I got incredible conviction on. Check it out. If you go out to the daily and you zoom out, the upside potential is incredible. It hasn't even broken out yet, really. Clearly, it broke out of its local trend, its local resistance trend line, but it hasn't gone past all-time high, which it'll inevitably break as accumulation continues. But I told you guys this morning on Twitter that this chart is intimately related to the curve chart. So if CVX continues to appreciate, it's going to put appreciated pressure on the curve asset, because CVX is a critical component in the percent yield that CVX CRV offers. So as the yield on CVX CRV goes up, that encourages people to lock more curve into CVX CRV to capture the rate of return. Let's keep it going. Let's keep it going. DigiLight's in the house. A pleasure. Andrew, do you think MIM could be the primary source for liquidity in Arbitrum? I would hope so. I think it is the most interesting stablecoin out of everything that's available. Surely compared to centralized potential stablecoins that have regulatory exposure like USDC and USDT. Bear in mind that doesn't mean you should shy away from those assets. I mean, they're just fine. They work just fine, but they're exposed to potential regulatory action, in which case they don't have longevity, or at least it allows for the emergence of the stablecoin opportunity, which was Spell, which I caught on to about a month and a half ago. We started talking about the stablecoin narrative, which I think is the biggest narrative in the crypto space. Frax is probably second on the list, in my opinion, for potential. UST and Terra and all that stuff is meaningful because that plays into the cosmos and the China narrative. So there's a big picture. We'll see how it unfolds. We only know the performance of this stuff in hindsight, but those are the plays. It's basically MIM, Frax, UST, and whatever Andre's cooking up, because everything he touches, you guys know what happens with Andre's work. Let's keep it going. Quantified. Hey, Noah, struggling to choose my allocation for ICE and Spell. I wish to hold both and I'm seeking risk on to build capital. Well, entries are hard, especially with Spell that's up like 2,500. Is it 2,500% already? 2,500%. Good 25x on the money. That's a heck of a rip since October 3rd. 7 10 is a little over a week. It was at 0.004 cents. Now it's at 18 cents. Well, no, if you got in earlier down here at like 0.0003, but if you zoom out, it was even lower. There's a large population that got in down here, 0.0009. I think that was around, was that by entry? 0.006? No, I think I got it down here, 0.0006. I don't know. Whatever it is, it was a while ago. And how do you get an entry at this price? I don't know. I don't have the answers. You only know in hindsight if it keeps going. If you look at market cap, you get a sense of where it is in the big picture. It's on the top 100 at this point. Spell is number 98 with 1.17 billion. And then you find Maker has 2.27 billion. 1.1. So you get a 1x to reach MakerDAO's market cap. So if you double your money, does that change everything? Is that worth the risk of extreme volatility? I mean, look at this volatility. Is that worth the risk of this kind of volatility? It's down 25% from its high. Personally, that wouldn't be where I'd park capital. So I'm quite biased because of my entry. I don't really care much about a 25% dip if I'm in down here. So don't go by what I do. This is, in many regards, the way I talk about the crypto space, this would be a missed opportunity. And you can't own everything you want to own, and I probably wouldn't take an entry at these kinds of prices, which is exactly what I do with time. I don't take an entry. It's just if I got in at $100, $500, that'd be a different story. It's at almost 7, 8, 9, 10 grand at this point. So you can't always take the positions you want. And if you need to rewind the stream, folks, to the beginning, that's my core perspective. That's my core narrative. You don't have to outperform. You can work and save money because saving works in the DeFi space. That's what DeFi is. It's a reemergence of a financial system that actually works and doesn't fuck its citizens. It's not necessarily a place to gamble. Sure, with experience, you could outperform the market, get multiples on your capital, but you could also, just like a casino, just like the stock market, or just like the crypto space of old, you could lose a huge amount of capital. But you could also explore DeFi and not do that and treat it and yourself with respect. Up only. There is up only investing. If you get 30% on your money, it's up only investing. Tell anyone in the legacy financial system you get 30% on your money, and they won't believe it. But that's base. That's the easy stuff in the crypto space. That's all right. How much you getting? I'm getting 30% on a MIM position. Okay, because that's what you get. Johnny Fur's in the house. No, my man, hit those likes button. We're doing pretty good today. Thank you, guys. Alex, brother, thank you so much for all you do. I got into a good position of spell watching your stream. It's on Phantom and the bridge to Ethereum. Takes a chunk out. Yes, it does. Anywhere to put it in Phantom for gains. Unknown. I don't. My spell is on Abracadabra on Ethereum, staked in an S spell position. But just watch out for the volatility. Let's zoom in real quick. Let's take a look at the 15 men. It's riding some moving averages. It's nice to see it above the 100 SMA and the 15 min. But bear in mind that 100 SMA and the 15 min is sloping down. We do got a series of higher lows, so that's nice to see. They're a little inconsistent. So you do have a bit of a wild triangular compression, considering this massive rip to the upside. But I doubt this particular compression is going to hold. But if you have something like this, oh, so maybe there's some symmetry there. I guess you see a little triangular compression. It would be nice if this particular peak got up a little bit higher. So right now, what you're seeing is volatility, and you're seeing straight up price discovery. People are trying to figure out what the heck to price this thing out. You got small time players, which is not so small, but you got $100,000 sales, 100,000. But then these big rips to the upside is a solid $1 million buy-in, $1 million. So you got small people getting pushed out of the market. They got in entries early. They're getting pushed out of the market at the top because they're taking their profits. And who's buying? Who's buying these dips? $1 million buys, $1 million buys. So the big buys are getting in on the big dips to the downside where the small players are pulling out. So this is a big, at least looking at the transactions at a high level, this is a big change of hands from smaller players to larger players taking much larger positions. It's going to be very hard to get an entry on this thing. This is not an asset that most should be playing. We talk about it because it fits into a narrative. There's a good story to tell about it. It's going to drive a good part of the crypto space. This is an extremely volatile asset. That's not necessarily the best play for most people. Probably not even the best play for the vast majority of people. On the other hand, Curve, if you zoom in here on the daily, what's it at, 270? I mean, here, the golden cross was right about there. It ripped right through the golden cross, and now it's ranging between these two price points. Very obvious trend lines, horizontal trend lines. But the golden cross was there. This, on the other hand, is an asset that is a much more palatable entry price. It's not too far from its entry price at 235, sitting at 270. Maybe you get a mean regression to the 50 SMA on the daily, but there's a fair amount of support. Obviously, like 100 SMA, 200 SMA in the 4-hour. See, it's below support there. It's barely on the 50 SMA and the 30 min, 50 SMA and the 15 min. A little bit of bullishness down at the 5 minutes. It looks like it's above all the SMAs, which is nice. And that, it being above the SMAs, the moving averages on the lower time frames and below them on the higher time frames, is a perfect explanation for why this thing is ranging between these two price points. People are trying to figure out where this thing is going. But for me, being a long-term macro investor, the bullish cross on the daily, the golden cross on the daily, means this thing may range for however long it wants to. But when this thing breaks this long-term resistance, it's good. But this isn't good for a 20x. I don't expect a 20x, and I don't care if it goes 20x. What am I going to sell the asset when it goes 2x, 3x? No, I'm not paying those capital gains. I'm not paying protection money. No, I look forward to a 1x or 2x. But if you put $1,000 into an asset like this, it's not going to do much. You have to redefine how you look at the crypto space. It's not always about turning $1,000 into $1 million. You could get it anyway. You rewind the stream to the beginning if you want the intro to DeFi and really how to target the crypto space. So the core of the portfolio should always be about stability and growth. And as I've always said, even through my periods of degeneracy, if you turn 1% of your portfolio into 10% of your portfolio, it changes the whole portfolio. You could throw around small chunks to turn into big chunks. Kimchi Crypto, what do you think about stablecoin regulation and the impact on Curve LPs? Bullish. I expect a huge amount of transaction fees and revenue for CVX CRV, VE YV Boost over on Yearn, and pretty much anything that captures Curve transaction fees. Crypto TO, well, a subjective statement, good buying opportunity, but it's a good statement. Daniel, how long do you think high yield 100 to 300 will last on DeFi? It'll last until it stops lasting, until it's diluted, and that's really the only thing that'll stop it. Dilution as well as the end of incentive systems. Incentive systems could basically be thought of as these protocols using their treasury to buy participation. It's basically a form of advertising in many regards. I expect it not to last in perpetuity, but the whole point is that's the yield. If you could capture that kind of yield, you kind of want to capture it for as long as it lasts, and then when it's no longer there, you move on. And that's an opportunity cost type process. Alex, Noah, how do you do a complete laptop wipe? It depends. I don't have tech. I'm not going to do tech support right about now, my friend. Just Google it. There's a on OS X. There's a couple of keys that get you back to basically a system boot partition, and then you're able to factory wipe all data. Crypto TO, I hope ICE does that. I think I'm very bullish on ICE. I look forward to it. I have a very large position at this point, considering my entry price. It's about $3 and change. Unfortunately, the chart isn't loading. ChartX doesn't always load. Come on, baby. Okay. So there's big volatility. These are big accumulation wicks. It's not a very liquid asset. It's not trading heavily because the protocol is not live. But wow, $22, $23. What an extraordinary price action. The end of the month when Popsicle Finance goes live, I have high expectations. I think it could outperform significantly. I, as I say always, I'm not good at entries. This might be a great entry. It might go to $300. I have no idea. But it could easily go down to $10 and you lost 50% of your money. So it's much easier decisions when you're down here at like $3 and you're able to watch. And if it dips 50% down to like $12, you get to ride it out. And other folks are trying to figure out what their entries are. I can't stand entries. I just rather be early. It was much easier to buy all this shit back in 2017 anyway and just wait 4 or 5 years. But not everyone has that luxury. F Dub, what's the play for Andre's KP3R? I don't know, but I have a small position. It's a fraction of a percent. But where is it? Fix Forex? Yeah. So best. Hold up. Are the right wallet selected? Yes. Yeah, so I got 54.88 KP3R vested, which claim? Yeah, so it pays in literally just euros, which is pretty cool. Um, I don't know. Tempted to like put some more. So obviously he's got enough sway to be able to get fixed forex directly onto convex, cranking out some meaningful returns. There's no base curve APR. There's basically no transactions. It's completely incentivized. He's got curve and CVX emissions, as well as his own incentivized emissions. So I don't know. There's a little bit of transactions. JPY 0.5%, so there is transactions going on. I don't know what the I don't know what the transaction volume is, but I don't know. Very speculative. I have a small position. Um, where was I? What are your thoughts on BTC purely for borrowing against and farming purposes? Opportunity cost. I think BTC is a great value storage asset. It's a great asset for the general public to purchase who has no exposure to crypto at all. It's a relatively passive investment because it goes up at what 200% annualized or something like that. So it's a great asset, serves its purpose. It's a value storage vehicle. It has proven that to be the case. It has no purpose really in a functional portfolio with productive assets. So I don't have any exposure to it. It doesn't suit my use case. But it's like I tell family to buy it because you don't have to put in any work. You don't have to manage your companies. I call these companies, whereas BTC is not that. Doesn't fit the same narrative. And it's not very functional from a collateral standpoint unless you have a huge amount of money. If you have $100 million, then you could borrow 10%. You borrow $10 million. Or if you have $1 million and you borrow 100 grand, you're not going to make much money off 100 grand. If you have $1 million worth of Bitcoin, you borrow 100 grand for safe collateralization. Um, yeah, put 100 grand to work and making 30 grand a year. Surely you shouldn't complain about 30 grand a year, but if you're making 30 grand a year off $1 million worth of Bitcoin, that's a fair amount of opportunity cost. Because $1 million a year, there's no reason that can't pull in about $300,000 a year, probably about $1,000 a day. So Bitcoin's a complicated thing from a functional asset perspective. It's not very functional in a business model. Papo Pepino. Dear Noah, you speak about yield generating assets as less risky, but if Bitcoin decides to go down 50%, those assets will too. Speculative and remarkably more. Hence, with the yield, or am I missing something? Yeah, because if you're making 30% on your money on stablecoins, doesn't matter if Bitcoin goes up or down. If you're making 41% on stablecoins, Bitcoin could go to $1,000 and you still have all your stablecoins. So, yes, you're missing a little something. This is a productive position producing 41% of the money in a stablecoin form. And if you want even less risk, you could go over to not try crypto, not 3Pool, but look at the yield. You get in single digit or double digit yield on stablecoins. I mean, how does that compare to a bank account? MUSD is a risk minimized stablecoin position. MTA is another story. I don't think it's an effective governance asset, but MUSD is effective at minimizing the risk of any one particular stablecoin. AUSD, they're all doing well, and they're proving themselves day after day. UST 27%, woo, Frax 31%. Big returns on just dollars in the crypto space. Daniel, thank you. Can't wait to use AskFit. A pleasure. Papo said, of course, not talking of stables. Those would be the true safe haven on a bear market. Yeah, well, my yield bearing positions, I don't mind if this gets cut in half, 50%. If it gets cut in half, 50%, I expect the rate of return to probably be about comparable. Look how CVX appreciation drives up the yield, 67%. Let's look back on CVX. That's because it's ripping to 15 and change percent. And Curve is also pushing up higher. So as these two assets go up, the rate of return on CVX CRV goes up. Let's look at transaction fee revenue, 8.57%, 3 Curve. I've seen that high, like 18%. Very high. I've seen transaction fee revenue on CVX CRV. What's AskVid? Crypto TO, that's my platform where you can ask any question you want, and I will respond with a video. Killis, Gary is not our daddy. No, is he gives better advice. Gary Gensler, my goodness, I don't, I don't know him. I would be interested to always have a conversation with persons with different views than my own. But I don't think I surely don't have access to the information that he does, but I don't think he's, in many regards, I have no idea why he's making the choices he's making. I don't agree with them. I think we could do better as a country, and I think there's great value to come from the crypto space with regard to business, productivity, work opportunity, and I think a lot of politicians miss that point. Excuse me. Vincent, Gemini down for a couple hours now. Yeah, Bitcoin is hot, so it's probably putting a lot of pressure on those centralized exchanges. Ethereum looks like it's ready to go thermonuclear. Foo Bear, never make market buys. Always put a limit. Limits are good. Limits are very good. Oh, E, good morning. Is there a website for the best place to stack your coins? There is not. It's a digestive process. It's an investigation. Albeit Zapper does a good job. So if you go over to Zapper and you go over to the pool page, pool? Let's see what it shows. Give it a second. Well, you go, yeah, the pool page. Look, if you go to fee APR, oh, well, pools aren't producing much revenue. Save APY. So here's some good insight, but I don't like a lot of the positions. Most of them are curve anyway. This is Aave. Aave V2 is cranking out 57% on Fay. I wouldn't want exposure to a lot of these assets. 13% on curve, that's pretty cool. On cream, I'd rather put it in CVX CRV and call it a day for 67%. 7% on compound for you for Tether. So there's a lot of places to find information, but most of it requires extensive due diligence. Start and don't stop. There's opportunity overload in the crypto space. It's worth the effort. NCal, what's the current best way to get ETH to MetaMask with fees being high? ETH to MetaMask? XLM? XLM doesn't do anything. It's not really a productive asset at all. No interest in that asset. Ethereum to MetaMask transaction fee. Holy crap, 163 Gwei. That's pretty high transaction fees right about now. 329 for the max fee with a 2 priority fee. It's gonna be like it's over $100 for a transaction dealing with any smart contract right about now. Probably, I don't have answers. I'm sorry. I haven't done much investigation into getting assets from like Gemini to Arbitrum or Avalanche or Phantom because I haven't needed to. Sorry, guys. But DeFi Dad, check out DeFi Dad and Bankless HQ. If anything, they probably have good information no matter what. Love those guys. Franco, hi Noah, CVX on CRV. Wouldn't that be a bigger play given bigger gains due to bribes? But I don't want, uh, well, I don't want bribes. I want transaction fees. I'm thinking of the curve position, what it's going to be in 5 years. So I don't want bribes. I want transaction fees. Joe, if you compare ICE and Spell to Sushi Curve and at YFI, it's clear that the projects are still extremely undervalued. I think that's a valid statement. HB, morning Noah, best 30 minutes of the day. Quick question. How do you move Spell farmed on Arbitrum to Ethereum? You got to use the Arbitrum bridge, which takes about a week. Arbitrum bridge. So it takes about a week to transfer your Spell from Arbitrum to Ethereum. I did that last week. I transferred a little bit of Spell and it executes, and then you're able to claim it and you get your Spell. So it takes about a week. So the main bridge HB, but a Spell might be on any swap. I don't know. Let's take a peek real quick. Oh, Arbitrum. No Spell yet, just Mem. Hey, staked. That's cool. That's interesting. Staked ice. Those boys are those boys are fancy what they're working on. Um, Quantified, I've entered spell at 12 and have rotated between it and ice, managing to turn 80K into 340. Currently holding spell and thinking to rotate it to ice for the launch of Popsicle. I would like revenue. Well, I can't argue with a lot of your logic, and you've done well being a rotator. So that's kudos. It's not easy, and the majority aren't successful at rotating. I don't know if you guys know that meme, so I'm playing on the rotator meme. I love that shit. So I'm happy for you. Protect your capital. It shouldn't be the majority of your position, and that's it. You only know in hindsight how things play out, especially when exposed to risk. Joe, whenever I talk to someone in legacy finance space, they think I'm running a Ponzi. Yeah, because they have no idea what they're doing, and it's just a waste of a conversation. Booze, which one would you invest in if you have to pick one? Spell, ice, time. I would invest in Curve. Foo Bear, my staked liquid is throwing off 2.4% of initial principal per day. Savings works. Thank you. 2.4%. It's better than a bank account. So folks in here talking about spell, ice, and time with respect, Booze. I have my spell and ice positions. You don't have to go after 1,000% returns. Think of this shit as savings. Rewind to the beginning of the stream and avoid the exuberance, avoid the temptation, and because listen, Booze, you buy spell and it rips 100% and it dips 50%. It's going to be pretty painful to watch capital loss, but that's what these types of assets do. They rip and they dip, and they throw you around, and they take your emotions, put them in a headlock, and make it very difficult. Let's keep it going. We're going to wrap this up in a couple of minutes. Andrew, when taking a salary from Spell, do you just take out the Spell you've made from fees and convert to cash? I don't right now. I don't need the revenue. I find it very nice the way Convex allows you to see your revenue. So Spell is very speculative. I got in so early. I'm just going to see where it runs. I wouldn't use Spell as a cash machine right about now. It's a very spec play. I expect it to go up significantly, and then I expect it to get hit extremely hard. Um, I don't really know what to expect. It's not stabilized. Whereas with Curve and Convex, I feel much more comfortable that it has stabilized. So I'm going to let my spell position ride for the time being. Anthony, every time I go wild on DGen, you are my anchor back to rationale and investing. Thank you. Thank you for, I know you've said that to at least one other person. And the more people we could tell about the crypto space and avoid the exuberance and be rational and look at this as savings, then we can help people. It's not about this is the crypto space. The stream today turned into spell, ice, and time because Abracadabra's on fire and I have my positions. But that's the last thing I would never, ever, ever recommend to someone getting into crypto to buy any of this stuff. They're not prepared. They're not prepared to watch a 50% hit to their portfolio and be comfortable. So that's a big deal. And I really mean that, guys. So if you're just getting into crypto, these are the last things you want to be dealing with. You can consider, and it takes a lot for me to say, a crypto asset for new investors, can consider Curve because of its technical setup, because of its history, where it is. This was a hyperinflationary cycle. This was DeFi Summer 1.0. This was a good part of September to January 2021. January 2021 didn't have a lot of bullish momentum throughout this year. But now when this is probably around Convex launch. I think it was August, maybe July. But when Convex launched, the supply started to get disrupted. So this cycle, these green guppies right here make sense. And with the golden cross, this is a decent entry. So, but you're not going to get multiples. If you buy $1,000 worth of Curve, and it goes to $5, which is a massive price for Curve. If Curve hits $5, I'm going to be stunned. I don't expect it in the short term. But if you put $1,000 in and you turn it into $2,000, you're not getting multiples. You got the wrong expectation for the asset. But this is something that's decent to purchase. It can dip very significantly, but with the golden cross on the daily, unless there's big macro financial headwinds, I expect this to be a strong asset. And look, you got the 100 SMA on the daily down here at 211. 60%, 60-cent dip on 270 is 25%. So maybe you take a 25% hit on your capital. But this is the conversation, Anthony, and that's why rationality is so important and to approach this space realistically. I'm going to say it one more time and then I'm going to finish up the comments. The last thing, if you're new to the crypto space, the last thing you buy is spell ice and time because you're not prepared for the volatility that's going to hit. It's inevitable. Fubear, there is a spirit swap LP for spell that you can stake on liquid for more incentive. Very nice. I have a spirit position, so good stuff. Fubear, Daniel is working with Spirit, so his projects usually get some love at Spirit Swap. My man. You see the connections, and that's good. That's where you get your asymmetric returns. Mitch, you can deposit Spell and Tarot. Yep, I know about that as well. Joe, I wish I knew who Daniel Sesta was sooner. Yes, I agree. Fubear Time and Olympus are the end of mercenary yeah, they're also the extent of experimental monetary policy, which I find extraordinary for a variety of reasons. Um, Bonded yield, and it's going to change the crypto space. Olympus Pro and the concept of bonding, that's another story. How the price of time and ohm play out, it's very experimental, but there's no reason it can't just go up. But I'm not going to expose myself to that uncertainty. I'm never early, never late, and I don't care about missing out on significant gains. Why not throw $500 into time and just forget about it? Uh, that's a valid statement, considering I can do that because I can forget about it. Most people cannot. If someone has like a $5,000 portfolio throwing around 10% into an experimental monetary policy is not good practice. And it's more important to learn about good practice rather than just throwing something at something and maybe it works. Much more valuable to have a sustainable value allocation and investment strategy. Booze, I really like Spell. I have the cash, but I hate to buy the top. Any recommendations? Yeah, don't buy the top. Wait for a serious 50% retrace. And if it doesn't come, the asset is not meant to be. But unless you can get a good price, I wouldn't buy things like that. I would never recommend buying those types of assets to new persons to the crypto space. Never buy tops. So, look, I'm a big Spell advocate, and I'm literally advocating for people not to buy it because it's not the nature of my channel. It's not the way we do things. So, food for thought. John, I couldn't figure out how to get Fixed Forex. Yeah, Convex as well as the Fixed Forex website, fixedforex.fi. Wrong network. He does the. I love this pig. Um, Lewis, my man, last couple minutes. Let's hit this. There's no way you're going to have time to get all these questions, but I'm going to ask anyway. What's the criteria in general for a token protocol to be listed on a major exchange? Basically, what Spell has, which is market sentiment, momentum, memeage, and basically when the exchange says they can make money off of it with transaction fees. So Spell has all the critical ingredients. All right, guys, you guys are killing me with the questions today. I love it. I can't get to them all. I'm going to end on Lewis's question. If I didn't get to your questions today, hit me up on AskVid. Again, here's the website. I'm more than happy to answer. A lot of them are going to have to be kept private. So do consider subscribing. I really appreciate it. noahsplays.askvid.co, where you jump in Discord and it's all good. Other people are there to help do better. We can do better. We don't have to take the risk. Don't buy the stuff that's up 10,000%. 71 people in the stream, 77 likes. We did better. God bless you guys. Monday, October 11th, 12:35 p.m. Thank you everyone for joining. Tell everyone to subscribe. After party on Discord. See you on AskVid, and I'll catch you again tomorrow. You have a good one now. Peace.